Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Okay, good afternoon, everybody. This is Dennis Wilborn. I want to welcome you to the How to Make Money Trading Stocks, Options, and ETFs. If you're joining us online, welcome. If you're joining us via either Facebook and or our YouTube channel, I want to say a special welcome. Please do me a favor. Please just feel free to share our content on these free webinars. Hopefully you'll learn a little bit, and also, who knows, you may pick up a potential trade setup that'll impact you or help you next week to make some money, put some money in your trading account. And so with no further, again, and also give us a nice little thumbs up and that lets us know that you are liking the content. So with no further ado, let's get on to today's session. Okay, again, this is Dennis Wilborn. Welcome to How to Make Money Trading Stocks, Options, and ETFs. Want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of or a promise of future performance. Always remember that your job as a trader, it's very simple. Basically, is you wait. I was reading something actually today, and what is the most important 5 words that every trader can ask before they put on a trade? Any thoughts on that? The five most important words a trader can ask. I'll give you guys a little bit of time to think about that. And again, if you have a comment on that, please put it into the chat window. And so I'm going to say the 5 most important words that a trader can ask. So the objective of this webinar is basically just to take a real quick look at the market, what's doing, what's going to be happening next week. I've got a couple of potential stocks and an ETF I want you to take a look at, and you may want to put it onto your own personal watch list. Next week, Fed meets and reports out on Wednesday. Currently, the Fed has been showing very a dovish type nature. Some people the analysts actually say that the big dump that we had back from October till December of last year was actually the result of the Fed not knowing how to talk to the people in the market. And then once they learned how to do that, we saw a nice rebound starting in December. How much, so that some people are categorizing that as the correction that didn't have to happen, but inevitably it still happened. So until the Fed meets on Wednesday and reports out, it's kind of a mark time type of period for the market. You just kind of bide your time. I personally don't like to jump into any new trades that are going to last over a period of time while I'm waiting for the Fed. And so the rest of what we'll do is just take a look at stocks and ETFs performance, bonus setups if we have any, and any of the IBD quality stocks. And remember, you have been given the keys. Now learn how to open the door. Here's where we're sitting as of about 9 o'clock this morning. The markets are up nicely for the year. Russell and NASDAQ has just been leading the way, moving higher. One thing we've seen this over the past couple of weeks, and we'll take a look at a chart of this, is a little bit of a detachment between our disconnect between the Russell and the NASDAQ. And we'll see if we can take a look at that and what that may foretell going forward. Active trend trading, we're up to about 5%. I was doing some sample trading in one of the things I'm going to show you today, and it did very well. And so we'll be looking at that. One of the things that we have been working on is what I call strategic compounding. This is our strategy 2. Last week I had a little bit of a loss, and we've been averaging a little bit about 3% per, somewhere about 3% per week. My objective is to average 5% per week. So this week on the one spread that were 2 spreads that we did for Adobe, we pulled in about $312. It was, it turned out to be a nice profitable trade. It was a little bit touch and go there. That's right, Mark. Yeah, the 5 pillars of active trend trading. You got it. And but one of the things that drew my attention to strategic compounding, the concept of compounding and the application of compounding used to be so prevalent in for many people going back, decades. I remember 30 years ago or 40 years ago, my mom and dad used compounding to actually just grow their wealth. I think that went out of favor when basically the interest rates got so low that people just couldn't see the benefits of compounding, so it kind of fell out of favor. But with the advent of weekly options, it provides us an opportunity to generate income on a weekly basis. And what I've done this year is just kind of twisted in the aspect of, well, what happens if we compound this? Strategy 2 is always a strategy where we wanted to generate somewhere between $5,000 to $1,000 per week, but I wanted to make it a little bit more strategic. And so, so far, year to date, we're up 25% for this strategy, and we are basically, our next week's target, 5% target, is $626.65, starting with an amount of $10,000. And our old buddy here, Albert, basically said that compounded interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, pays it. And so I'm sure we have all, well, maybe not all of us, but the majority of us has been stuck on the side of having to pay the interest. And I think it's time we basically just kind of reverse out of this. What I'm aiming at here with this particular effort is folks who, let's say maybe they're just not where they want to be with their nest egg and want to continue growing their nest egg, but they may not be working anymore. They may have actually retired, and I want to basically provide a vehicle, an avenue, a pathway, and so that they can say, hey, I can grow a small amount back into the nest egg that I once had. Javi asked the question, are you using compounding to set your target, or are you also referring to how much you're investing in trades? Basically the second part of that. I know what my compounding target is, Javier. However, then I try to structure my trades around that. And it's gonna vary on a week-to-week basis. But I want to stay positive, and I want to basically start, generating this. As you can see, the first 3 weeks of the year, we actually didn't do anything. We're getting things set up and put into place, and then we started generating a return on a weekly basis. And again, we are getting into stride of hitting that, where start hitting the actual 5% target. If we go over it a little bit, that'll be good. But recognize, hey, we're not trying to catch up or anything, but just let you see the value of compounding. I mean, there's 2 weeks left to go in this quarter, and we're up 25% on this particular strategy. So for some people, they would look at that and say, hey, that's a pretty good return for a year. And actually, it's an excellent return for a year. So that's what we're working on there. I'm going to be I'm going to be talking about natural gas here a little bit later. Nat gas has its own seasonality, as you can see, kind of flat for the first 3 months of the year, and then it kind of takes off from there. One of our members suggested a couple of ETFs that I just really have over the last couple of weeks have gotten where I really like these ETFs, and will be utilizing it. NASDAQ also kind of typically stays kind of flat the first part of the year. Hasn't done that this year. We'll see what transpires. As you can see, we typically get a little bit of a tick down the first part of April. And so with 2 weeks left in March, we'll see if that transpires for this. Gold futures, here we are. We're in the month of March. Gold typically pulls back a little bit, drives sideways, and then oftentimes coincides with the Indian wedding calendar or wedding season for basically this big move that starts in around the end of July, runs through the mid part of October, then kind of goes sideways for a while and gets a little spike up in the November, December timeframe for the Christmas rush. And so that's what we're looking at there. Crude. Are we going to get a spring load in crude going into March and then take off from here? We'll be watching that, and that's what we do with our premium membership with active trend trading. We look at, okay, what are the seasonality, and then we trade some very limited things. I believe that focus and concentration on movers that will typically generate that by themselves with a non-leveraged ETF will generate 20 to 25% per year. Is where I would like to focus, and it's done that repeatedly year after year after year after year. What does that do for us? It keeps us from having to search for all kinds of other stocks and our stocks because we'll already have a stable full of absolute fabulous thoroughbreds that can run the race well. Hey, future presentations, if you have a group that you would say, hey, I think they could value from what the active trend trading has to offer, please let them know about us. I'll be glad to do I can basically link in via a webinar, and actually, whatever time your meeting is. I do a monthly Bay Area Moneymakers out in the San Francisco Bay Area. We do, and our next one's coming up is April 6th, and we're looking at clear and simple trading rules, preparing for record profits, and the spring rally. We want to be ready for the spring rally. Here's one of the other things that we do through the week. I've got to slow down with my cursor. My son says I have a nervous cursor. And here's my partner in crime, Brandon Wilborn, on the left here. Brandon worked with me just after he graduated from college, and then he developed some of our strategies with active trend trading and has done a really, really great job. And we're glad to have him back on the team. There's of course, well, who is that young guy? Oh, and there's my lovely wife, Michelle. It's funny. She still looks the same, and I just keep getting older. I don't understand that. And then here's our son, here's my son, his wife, and our two beautiful grandchildren. So let's look at some charts, and then we'll pull back into basically putting a cap on this for today. 2 hours. Oh, that's looking pretty good. Weekly daily. Yeah, let's just take a look at the weekly daily. Excuse me. SPY. Okay, this week is monthly option expiration week. Typically, the monthly option expiration week has a positive bias, and as you can see, over the last 1, 2, 3, 4, 5 days, we've had a nice bullish bias. If we broke out of this little flag off of the 34-day moving average. Where's it moved up to, though? Okay, yes, it's had a bullish bias, but it's moved right back up into resistance and hit it like it was a brick wall and has stopped dead in the water. What could that prescribe for us going into next week? Well, one of the things I'm looking at next week is the first part of the week, it'll probably be very contained and tame simply because everybody's waiting for the Fed. The Fed has become very dovish on what they want to do with their interest rates. And so that may very well mean that we spring load out of that for a continued rally. If the Fed hiccups any whatsoever, or if something transpires in the world that will, could potentially impact the Fed and or other economies around the world, we could expect a breakdown and a move down. What are some of the things in this chart? Well, let's look over here let's look at a NASDAQ chart, because the NASDAQ is actually the QQQ representing the NASDAQ. Come on, there we go. So I wanted to show you that on the S&P, and look what's happening on the, come on, there we go. As you can see, it actually pushed on higher, and so of the three entities, it is the strongest strongest of the indexes, of our tracking indexes. However, what is it doing? It's basically pushing on up into resistance that starts at about, I want to say 180-ish on down. Nice bullish move up this week, broke out of support resistance at the 175.58 level. However, there's a glaring piece of information on this daily chart that we at least have to be aware of, and that's that this TSI low is, this TSI high is lower than the one when the price action was here. What does that tell us? It means that we are making newer highs on less momentum. Therefore, and so, yeah, Mark, they do. They're riding both the 8 and the 20. The daily charts over here, they have been riding that fairly well, especially respecting like in the 34 and the 8. And so, you may ask yourself the question, I know some people do, why do I have the 34 period or daily 34 EMA daily moving average? A lot of future traders utilize the 34-day moving average, and if they come in and support, you'll see that bounce. And so what that is a bounce that you see here between the 20 and the 50, and oftentimes that corresponds to the 34-day moving average. But as you see here, negative divergence. Is that telling us that, oh gosh, run for the exit and sell everything you have? No, not really. But we have to be aware that, yes, it's starting to put in that kind of a move. And so it can continue to push up even when we've got negative divergence, but we want to be looking for signs and signals, candlestick signals, that the momentum on the price action is also moving down. IWM representing the Russell 2000. Come on. IWM representing the Russell 2000 on a daily chart. As you can see, interesting here is Russell did a lot of leading on its way up into the to these highs that we experienced at the, there we go, at the end of February. However, the Russell came up and tried to retest the highs, fell. And now, the question with the Russell is, okay, has it reached its pullback into the midsection here? Because where has it gotten to? We talked about this on Wednesday night. It's basically done, as you can see here on a weekly chart, from last week's big, this was a hanging man followed by a big downside red candle, and price actions has moved up to approximately half, so we have a half back in place. If we fall below this section right here, okay, that half back number, about 154.61, then we're most likely going to go back and retest down here at the 151 level, and if we break this low right there, okay, that low, that will indicate that we are back into, because that'll be on the other side of the downside of the 50, that we're basically moving back into a more significant correction. So that's what we'll have going there. So those are some items and places that I'm watching this week. I will throw out a couple of other ones. I mentioned the natural gas. UNG is the non-leveraged ETF for natural gas, and as you can see, it's just kind of moving sideways here, right in the middle of the Keltner channel. Not really a move, signal to the upside or a signal to the downside. But we do have, an uptick on the weekly chart. But again, we're staying below levels of resistance that are formed by the 34, the 8, the 20. If we go ahead and we bust out the bottom side of this, look to trade. Look to trade into DGAZ, DGAZ. I talked about this a little bit last week. DGAZ, and we would be looking to trade DGAZ to the upside. I'll show you a little trick about what I'm utilizing to assess what to do with DGAZ. And what I'm doing is off the 2-hour chart, and then utilizing the 15-minute chart or the 30-minute chart, looking for flags to take a trade to the upside or the downside. Because, and the other thing to watch on this, again, this is a 2-hour chart on DGAZ. And as you can see, from the low of the Keltner, come on, there we go. From the low of the Keltner here, back to the high of the Keltner up here, is about a 7 to 8% move. And so, but it does it really quickly, like sometimes on a daily basis. So with that being said, what I'm looking for is a move that I can pick up several dollars, like here's a move back up, pick about $5 or so, and it jumped all the way about a 5%, a little bit over 5% move. And knowing that this entity moves like this is where you can plan a trade around it to say, okay, here's a swing low. Where am I anticipating this swing low going? Well, it's very simple. We just throw on a fib, and I'll give you a couple of targets. This is the way I do it. I can just say, okay, I've dropped from this high to this low. Okay. My target on this potential move is up here at around $94, about $94.40. The next target is up at $95. And if we did get a move like that from current position prices, yeah, it would only be like about $1.20 move, or on up here to about a $2 move. But, and that happens basically on a very regular basis. I mean, it just, as you can see here, we've gotten, as we were following down here, I'll go over to the upside side of this to let you see how to trade the upside side. This is the leverage ETF. Every one of these pullbacks into the moving averages, okay, resulted in a nice move higher of about $2 or so. So or $1.50 at least. So from 330, 350 up to 35, pull back in the moving averages, again, 34, 39 up to about $35. So good things to be aware of with what this is tending to do. As you can see on the 2-hour chart, our TSI has turned over, and so I don't want to be long this. I don't want to have a long position in UGAZ until my TSI on a 2-hour chart gets down here into the lower reversal zone, and price action gets down here closer to a level of support, which is one level of support there, another level of support a little bit below that, and you can just kind of tick it down to say, hey, there's another level of support there. I would like to see it hold here at 32, and if it did hold at 32 and we got a bounce, if it even moved up back up to 36, it's about a 10% move. And so I have no problem whatsoever in taking profits at 8%, at least on half the position. That way we pay ourselves, and then let the rest of the position go to break even and or a higher value, so we can take out another T2. One of the ones we've done recently, and I'll just share this with you really quickly, is our buddy Palo Alto Networks. Now, Palo Alto Networks is a couple of weeks ago for premium members. We got into Palo Alto Networks right here. I think it was last Friday actually at $234.99. You can see we pushed on up, and this was as in concert with the Adobe earnings run. And sure enough, we pushed on up, hit a new high, closed out about half the position, made about $240 because we only had 65 shares. Sold 35 shares. Now we're getting a nice little pullback, and we'll see if we bounce higher from here. But just being aware of how to trade this off of the 2-hour moving average. I'm not sitting there all day watching the 2-hour, but I'm just looking for where are these important high points and low points on my TSI. So, okay. That's all I've got for today, guys. Let me go back to my... yeah, I hope that you spend a little time this weekend checking out UGAS or UNG. UGAS. Oh, there was one last chart I wanted to show everybody to also pay attention to, and that is our buddy PayPal. And here's the reason why: is PayPal is just now breaking up through the through $100. $100 is a really important psychological level. Oftentimes, once a stock breaks through the 100 level, it basically gives it a free course or a clear course to move on up to 120, 140, and it's just an important psychological level for a projection up to the upside with the entity. Let's look at right here. We'll throw this up here, and we can see this. PayPal is at an all-time high. Am I going to buy it right here? No, but I have to be aware that hey, I broke through 100, so any type of pulling back into approximately 100 may provide me an opportunity to get long on PayPal for a move up to approximately 125. Okay, my friends, that's it for today. Let me get back and just sign off of the that provides you a couple of opportunities to look at. Hey, continue growing the egg, trade wisely, trade profitably. If you're a premium member, we'll be up at the top of the hour to talk about some of the premium opportunities that we have out there. If you're interested in becoming a premium member, send me an email and I'll show you how to sign up at a discounted price on the premium site. Final hour. And again, from this is a view from my office. I love Hawaii. Anyway, aloha, trade well, and prosper. Have a great weekend. And as we like to say here in Hawaii, mahalo for your support, and mahalo for just being part of the team. So aloha. God bless everybody.